Okay, folks, had a complete crash. Broke rule number one. Always reboot my Mac before I go live. I am not sure how you folks that use Macs actually survive with this thing. It's kind of crazy. So I'm setting up some things. Hopefully, we'll get some folks to join back in. Uh, we'll do some analysis and some stuff there. Um, Real quick here. Excuse me one sec. All right, folks, give me just a minute to get some things set up. Uh, it looks like my favorite computer in the world, my Mac, actually locked up. So we'll just trying to bring some things up here, and we'll get back to hopefully back into some sort of flow. We'll see how many folks join up. Okay, trying to get back into flow here. Let's. I was starting to do some analysis, and right as I did, the market got hammered for 10 points. Classic. Um, Everything froze up. I'm not sure what you guys were able to hear. Um, um, yeah. So anyway, let's try to get through some analysis here. Let's make sure everything's working. You guys should be, just give me a couple thumbs up or let me know sound, everything is good. It's funny, I kind of came in here, I was in another meeting, came in, and I forgot rule number one: reboot this environment. It's the most unstable environment I think I've ever been in my life. So um, I know that I haven't done the latest update. Maybe that's why they're okay. So let's try to get back in here. So one of the things that we're we're seeing here, just looking at the algos on the S&P here, they're starting to forecast off a flat line. We got like the RTX sell signal. Somebody was talking about, what those are not necessarily where you want to sell. What I mean the reference to the sell signal is that it means that we go sideways to down. It can, especially in these strong melt up markets, it's not like, okay, let's go put a short on. It's never been that. It's really a consolidation signal. I should call it RTX consolidation rather than the sell. We have seen events where we're at peak values and we get the RTX number. And the RTX, let me just bring this full screen, is when the market closes above the market grid numbers here, which we did a couple of days ago, and we just continue to go up. And when you're in a melt up, you always have to be alert to what the what the conditions are that you're trading in, and these are very dangerous. There was a reversal pattern that was out last week. If we go over to the weekly chart, and I believe it was on the NASDAQ, and I told everybody, be really careful. I would not do this outside reversal bar. And we got this reversal last week, and now we've just got this huge spike up. We actually were able to make an all-time new high on the NASDAQ. Crazy. But it's interesting what the algos are doing here on this NASDAQ. Let's explode this up a little bit. Try to get into some flow here again. But we're going to get an RTX sell signal, which means sideways to down. With this kind of move, you can go through a lot of this chart. You're not going to see an event like this. And I remember on Substack, I was talking about this is going to be the biggest week of the year, just because of everything that was in it. We had the elections, which are, been crazy between all the gaslighting and all the craziness and what the media has been feeding us. Man, I'm telling you, my head's spinning just thinking about what we were just through, right? It's been, I live in a so-called battleground state, right? So you could not turn on the TV without getting hammered with all this negative ads and all this crud. It was absolutely terrible. I know anybody that's any of those 7 states, probably there's other target states that they spent a lot of money. I mean, I heard Kamala spent $1 billion and then she's 20 million in the hole. Thank God she's not going to be managing the government. That they're pretty good at spending money. They're like my ex-wife. She's like the best at spending money of anyone I've ever seen. She can spend money when there's not even ways to spend money. So it's pretty crazy. Anyway, so what we're seeing is a lot of excesses out in the markets. We're probably what I want to point out here is the red dot. Those are predicting weekly closes. It is showing a couple of weeks flat to down, so we very much could get that. Yeah, I'll try to go. Hey, Steve, I'll try to answer your question here in a minute that you just put up, and we'll kind of focus in on things that we normally talk about in. Well, maybe we'll call this second session. We'll call this more the Discord section. I'm going to go back over. Let me just see something here. Yeah, that's interesting, and I've seen some crazy stuff with TradingView lately. I think they're getting too big, and we're seeing lags. I'm looking at the chat on the Discord channel right now, and yeah, I've been seeing a lot of lags, weird stuff going on with TradingView. I can't imagine what it's like to run an environment with 60 plus million customers accessing a real-time environment. It's, I remember a guy was telling me, I think about 2 years ago, that they were talking about going public. This is probably a pretty good environment to do that, and certainly with something like that goes on. I'm looking at Justin's comments here. Yeah, some of the stuff that we had to endure. I mean, my head's spinning. It's just, I think everybody in this country has just been really trying to come down off of this. But the obvious vote has been made by folks. I saw Musk posting that the Democrats want to get rid of the popular vote. Boy, they got to anything that somehow that there's only one party. It's an interesting thing. So I will go to and we'll do a Tesla review, Jack. I don't use TradingView, just so you know. It's a very retail environment. It's amazing. I mean, we put our indicators out there so we can do that. There's no other environment that has the impact that TradingView has, so it's huge. For trading, I use TradeStation. Actually, have had a pretty good day considering everything. So what I do, I'm going to bring something up here. So this is the TradeStation environment, and I've got the WaveTech webs on here. So we got this. Literally, this is where it froze up right at the highs. It's classic that we got this, but this is my trading environment that I use, and I can actually just come off of this over here, and I can actually put trades in. I've just got some live orders here, but I can easily just go in there and trade off of the order book. And the plan is to do some order book analysis as well, so folks can start to see exactly what's going on. But this, for me, I've been a TradeStation user since 1992. In fact, I was the guy who coined a solution provider with Bill Cruz and his brother, who were the original founders. And so, yeah, I go way back. There's actually user studies on this platform that I developed in 1994. They've been on this platform for years. So we were the very first folks to actually do an add-in for TradeStation back in 1992, so a long time ago. I had a product out at the time, which is still the same models that I've used. They've been really tested over time, which are, the original product was called Market Mind. So anyway, and it evolved into VPM and WaveTech. WaveTech actually goes back to 1984. Okay, no. But anyway, this is the environment that I'm using, and I'm actually just using a PC share link so you could see this environment. So let's go back and just talk a little bit, see if we can start to get some flow in this thing. We only got like half the people came back. Don't blame you. But one of the things that is important for me when let's just talk indicators, let's talk trading for a few minutes, is one of the things that is important to me when I'm looking at environments. I'm trying to do typically a multi-series breakdown. If you're an intraday trader, I usually use a 5-minute for trading because I'm a scalper by trade, and an hourly chart to look at some trends. And I noticed somebody was talking about on the on Discord that there were some things going on here from the standpoint of I'm just getting this up. This is the hourly S&P. Looks like there was a pretty good. There's a thing that we talk a lot, like a V bottom. Looks like we had a pretty good indication out here. All my times on this chart are local times, which are now Mountain Time, which is 6 a.m. this morning, about an hour and a half before the market opened. Let me blow this up a little bit, but right here, where all of these indicators had a V, that was the final low, and of course we saw the turnaround rally. And what we're getting now is starting to get a little frothy here. We see the rejection off of here, and you can also see the algos are starting to project down, and the red dot indicator, let me blow that up so you can see that is showing us that we're going to come down and probably test this 10-period moving average. PPM1, it's we're not going to get there because we're in the final half hour here, so this would carry into potentially Sunday night. But this is I use this chart, and then I will come over from here and go to a 5-minute chart. Let's just put a 5-minute up. And actually, this will be kind of interesting here. Is we do have a bit of a turnaround being forecasted on a short-term level here. We've got the PPM1. Like I said, all these dotted lines, those of you who have the indicators know this, but the dotted lines are the forecast for a turnaround. That's 5-minute chart. This looks like we've got a shot at challenging this 10-period moving average. Maybe we can get back up to 32 range. The high so far has been what, 30? Hang on, I got to go over here and just get the high has been 30, 40, 50. So right after we we got a little bit of what I call a flush, and then we got a print down. So what we're looking for is that this bar that we're on right now is potentially a low bar that's coming in here, and all it's being projected potential to rally back up to the 40 and the 10 period moving average, which is going to be coming in. Where we at here as far as timing goes? I'm just going to make the numbers a little bigger so we can see that. Yeah, so we got about 2 minutes to go to this 5-minute bar. Let's hang out and watch this, and I'll just talk about some of the things. One of the things that happened, I mentioned that we started this all in back in TradeStation in 1992. The indicators, what you see where the solid lines are, that's what I've been operating for years. Okay, we're here with the auto regression math that we have in here is where the dotted lines, so we're getting a forecast. So what we'll see here is the forecast is for a little mini V turning up here on the PPM1. That typically will tell us that we're going to challenge the challenge will come after we penetrate through this green line here, which is what is referred to as a first derivative. Once that happens, then we should challenge this downward line, but we're looking at a 10 period moving average from the standpoint of a 10 minute, a 5 minute moving average on the 10 is actually sloping down, and it looks like we've got a crossover here right about 6:30. And I'm just looking at some other metrics. I'm looking up at my TradeStation above here. So we're trying to come into a potential low here. So we're going to get an update here in 23 seconds. So what we look for, so if you're using these indicators in trading, so we're going to more of the Discord presentation. If you're looking for this, what's going to happen here? We still have downward pressure on PPM 2 and 3, 5-minute chart. PPM1 is forecasting a bit of a turnaround. We're going to get the update here. Just got it. Okay, this is perfect. So what we got here, I'm going to draw this in, is we didn't get the V. So the second you see this, so we were forecasted to get a V right here, and we actually got a downslope. That tells you that's not the turnaround. Maybe the next 5-minute bar, if we get a turn up, then maybe we'll do this challenge. But you can see the market grid is in here. Let me try to unpack this. So if we just look at from this standpoint, we've already made a new low. By getting that flat, we weren't going to get that turnaround. I don't have a good way to be able to show you some screens. If we see something here, what time we got? We're looking at about 30 minutes. Usually don't like to do trades in the last 30 minutes. It gets kind of crazy, but we're still seeing the lows. We didn't get that V, so that was telling us the bottom isn't here yet. So what I was hoping for, we get a nice V. It would tell us that the prices are going to at least turn back towards a 10-period moving average. You can see right now the orange heavy line is the market grid, which is basically it's similar but way different than like Bollinger Bands. What these are doing are looking at the average bar range for the last 3 bars, and you can change that to any numbers. Yeah, but I've always used the 3. They're defaulted at 3. And what that does, it gives us an expected range for each bar. Doesn't matter if it's 1 minute, 5 minute, hourly, daily, weekly, all of that stuff. All what it's going to give you is some expectation. So we could argue if we look at, we also have on the market grid, we also have all the Fibonacci relationships on each bar. So the concept here was that every bar, look at, we just went through it as I'm trying to explain it. So we're already trading through RTX. We're just continuing this this downtrend. It looks like people are squaring up trades as we're starting to come into the close. So didn't get the, let me bring this back up. We did not get that V. In fact, now it's interesting because we're getting a forecast for another potential V. Where are we at? We're 2 minutes and 26 seconds away from the next update. So let's just play this along. We'll kind of put a real-time trade. I may put a trade on the PC, and I'll let you know what's going on if we can get to that point. So we got another V forecasting, really not getting follow through here. So all of this downward pressure on these moving averages are still heavy in. We traded through the RTX level. So we've shown that the market has traded beyond its normal pattern that's happening. We had, where I have my cursor right now, we had one of those bars right on the top of the hour, came back in, we consolidated, went back down. So we did not, over here we got a slight uptick on PPM 1 and 2, but nothing that's going to be material. This is this downtrend that started just 30 minutes, better part of an hour ago now. Let me get what time that was. Yeah, that was at 12:48, so a little bit about 35 minutes ago. So these bars, we're still in this downtrend, but we're once again have a potential forecast. 49 seconds, we'll get a forecast for what's likely to happen here. Let's see if we get an uptick. And while you folks are looking at that, I've got my guns loaded over here to see if there's a little retracement rally. As we've actually went down from 40 all the way down to 22, so 18 handle sell-off here. So we probably get an echo bounce. Here we go. We've got 20 seconds to go in this bar. Let's see if we get a nice clean V bottom, even though it's just on PPM 1. It's kind of not as good as an hourly V, but we'll just see what comes out of this here. There we go. 1 second. Okay. Nice V. So I put a small long on here. And we also got an uptick on PPM 2 here. And so we'll see if we can get a little bit of a burst. Unfortunately, like I said, I don't have a way of showing you this. So I've got, I'm kind of just playing it real close. I've got 25 on. I just put some sells at 23, 25, 23.50. I've got to scale up on this thing, see if we can get just a little mini bounce, just scalp some money here. We'll see if that happens. So what we want to see here is that we want to see a green bar and see if we can get this thing to turn up. It's got some reasonable probabilities here. I've got, like I said, I got a 23 order. They almost traded 23, 22.75, 23 even on the. Right now we're still offered at 75. Offered 23. Just filled 5 lot there. Just filled another 10, 15. I've got 10 left now, and so here's the bounce. So I was able to use that little V. I'm actually exiting here. I was able to scalp a little bit off of that V bottom, and so everybody has a different style. One of the hardest things to do is trying to find big swings. That may be the beginning of a much bigger retracement. I would suspect that we can get back to maybe 28, back to 30 here. Maybe this is ultimately going to lead us back to the 10, a 10 period moving average here on this, which is going to give us 29, 22, but that number's coming down every 5 minutes. So 28 to 30 is probably the target. We'll see how this thing plays out. But if we look at PPM, so this is a kind of a day trading concept here. So I was able to just go in and scalp. I scalped a lot of trades I'm going to do is 4 to 6 ticks. That's all I care about. I put size on. I had 25 contracts on. I was able to scalp like $600 and almost $700 in seconds off of this V. So it's a matter of how you position yourself. If you start to extrapolate out, it's kind of hard with these downtrends here that you're going to be able to extrapolate out there's some big trade here. There was a scalp off of this number, and I'm a very seasoned trader, so I can see that scalp, and we may see a complete retracement. It looks like PPM1 has got more, maybe a challenge of the 10-period moving average. Seems to make sense that maybe we dropped pretty drastically, folks. Like I said, 60-40, I'm looking up at TradeStation here, 60-40 down to roughly 21. So we're looking at 19 handle hit there. That was literally one of the biggest drops that we've seen for a while here. I'm looking at the chart. So you can see we didn't have anything. This is all the way back down, into this previous consolidation range right here. So, yeah, so probably right. Most people don't understand what a scalp is. It's a very, very short term. Like a 2-minute trade is sometimes a long trade because I'm going for size, trying to when there's no big trends. If I see some big turnaround, that's different. I'll play it a little different. But scalpers don't need much. You put size on, and you need 3, 4, 6 ticks, and so that's their 25-point tick. So you get 150 points. This thing's still going, folks. I could have stayed with this, but I have the attention span and trading like that of a gnat. I'm like in and out. So you can make a lot of money if you have the capital to trade a little larger. You can do these. One of the things that I should alert you to, and it should have been out, but it's one of my associates has been down sick for multiple days, and we work together on a lot of these projects. But I'm about to do a symposium and another live event, and I won't be able to give you an exact date, but it will be in early December, even the first weekend or second weekend of December. I'll just throw that out there. So watch your emails. I'll probably do some things here on YouTube. But I'm going to be teaching some of these techniques, day trading, how to position, some strategies within a trade. So not just a scalp. You can see, look at this. We got one bar off of that scalp. We just got an update, and it's already fading back in. And you see that PPM down here. Let me draw in some things so folks can see exactly what I'm talking about here. So this is what happened. So right here, and we didn't get a continuation, we got a flat, but this is the most important one. This PPM2 actually turned back down, turned south. So we easily can make new lows on this run and not get a bounce. I'm looking here, we're really going to challenge this in the next couple of ticks. We're trading 23, 21, I believe. Hang on, I'm running on 2 platforms here. Yeah, 22 even was the last low. So it's going to be quite easy for this thing to roll over, maybe make a lower low. Maybe we finally get some retracement, everybody taking the money home and selling out of this thing. But this little turn down here, we also got no follow through. What you want to see, I'm just circling what's happening here with the PPMs. If you're trying to play like a big major turnaround, I know this is a 5-minute chart, but even for a 5-minute chart, you're going to see this. I'll show you. We'll do some analysis here because I was in my little rant, and then we had a crash. But I'll show you something here. Let's just put this in. So there was a previous trade, which is the inverted V. Check this out. I'm going to draw little circles here so you can see where to focus on. And what we saw here was even more interesting, because this was the trade. This was the trade off the top. So we got PPMs, all of the, look at the values, all down. We got big downtrends forming. We just made a new low on the 5-minute. I'm just telling you that's what the current PPM configuration is telling us. Yeah, and Steve, I just saw a comment from way back. Do the red dots work in all time frames? Yes, but you can validate these things as well. Anybody that's familiar with the TradingView platform, you can do a replay, but I can tell you this, and I've seen this, what you see in real time, what we've just seen in real time, if you replay it, it looks slightly different. It's not as clean as the real data coming through in real time. But what I want to show you here is the real trade was right here. This bar right there is where that V turned around, and then we had V's in all of the indicators, even going down to the 200 down at the bottom. So when you get that kind of trade, that's like a monster trade. Well, that's we're printing at 21.75 right now. So this is a new low. It looks like we printed. Let me just see where we printed. Sorry, folks. I wish I could get this on the screen for you. Yeah, the low was 2050. So we bounced back to 22 again. But this, you can see a couple things are happening here. So let's hang with this. What time we got here? Yeah, we got 15 minutes. There's a guy that used to hang around in the old live trading room. He talks about the 10-minute rigged, right? 10 minutes before the close. That's where all the MOC, market on close orders, come in. Everybody starts to square up their books at 10 minutes still. So we'll see that as well. But what I want to point out here is that all of these V's, if we go from here, were in sync. And when you see that, it typically will tell you that there's something bigger. There's a swing trade coming. So it wouldn't matter if this was a daily chart or a weekly or 5-minute or hourly. When you get this alignment, it gives you, I'm big on clustering of events, especially with things that I am very familiar with the PPMs. If when I see all these, and this is called an inverted V, upside down V, when those happen, then you got the big short trade here, and you could effectively maybe not covered until maybe this bar right here. Let me just bear with me a second. Let's put another color on here. So when this bar turned up, and I hang on, wrong place. When this bar turned up here on this V that I did that little scalp off of, right here, this was where the bar was. The scalp came in on this bar right here, and that so there was a quick scalp. I knew this was not going to be a big, but there was probably enough to catch a 4-6 point move. I left a little bit on the table. I'm looking at the trade. I took four ticks out. I actually started selling with 2, sold another one at 3, and my average out was 4. But there was actually more in that trade. There were 1, 2, I'm looking at 3 minutes in that bar. Could have traded up quite a bit just looking at the other platform. But when we're looking at these setups, okay, and if you're going to be, this is a scalper mentality, but everything I'm showing you now, you guys have the indicators. You can get this. And by the way, if you don't have them, you can go to kindlereport.com/indicators. And if you get, there's a subscription, and there's also a buy to rent. You can get a 7-day trial with those, and there's an outright buy. So it's a one-time deal. It doesn't have to be subscription. You can buy them. All the prices are on that. You can go to that link and find out about that. But the patterns that I'm looking for here and setting up are exactly what's happening. Look what's happened. So while I was talking, we got another forecasted V. We're now seeing we've seen the PPMs all turn back up, and now we're seeing finally maybe a potential where I know I got a lot of bars going on here, but this 10-period moving average is going to be our rejection point in our trade. Doesn't look like anything substantial. What we want to see is over here where the PPM is going to penetrate that green line or the first derivative. Once you get that, then you have a higher probability of rising above the moving average, all that stuff. So just to put this up here, let's see here. Do they give me? Yeah, they do. So this first indicator is tracking the 10 SMA. I'm just going to put these up here, so we'll make this a little bit of a course. And then down here, so I've got this mocked up pretty good. Each one of these indicators tracks a moving average, and the whole theory of what I'm showing you is that angle of attack and that how markets will get extended beyond maybe close to a deviation or maybe even a standard deviation away from that moving average, and at once that moving average will suck it back in. But when we get this negative, where I have the pink line here, right here, where these pink lines, these are when you're in this negative mode, this tells you that you're in a downtrend. And then you start looking, what we're seeing right now, I've got a lot going on this screen, so hopefully you can follow everything I'm talking about. We've got a bigger pattern that's starting to show up where we're starting to see a bottoming pattern, and we're going to run out of time. We probably have some time after the close. What do we got? We're right at that moment in time where we start to get some retracement. In fact, it looks like we're just punched out another low in this retracement. So we're up 16 handles now. We are now 20 handles off the highs. We're trading 20, 50, 20. Right now the bid ask is 2050 at 75, and we just went to quarter 50s. So there's a lot of activity coming in here right now. So we're still printing lows. We're still looking for the low. And like I said, it looks like shortly after the close, maybe we might get a low to come in here. Let's put this. So where I've got the right here is where the crossover is going to occur. I can't get to the actual numbers until I take all this stuff off. But you can see here, we're not getting any penetration over here. This is still in a downtrend. And only thing that is likely to occur, we just got a little reversal here, is that we're going to trade back up to the 10-period moving average. There's probably another scalp in here. So let me just can all this stuff so we can see what's going on. So now what we're looking at is right over here is where the pattern, and all this stuff is extending out. Unfortunately, it's the end of the day. I wish I'd have been doing this earlier. We might have been able to really focus in on that short trade that happened here on that inverted V pattern. But yeah, so this is, but just so, this is stuff we're usually doing in the Discord room, just talking about things. Yeah, so Todd's talking about MOC imbalance 2.4. Yeah, I typically find a lot of those imbalances, we go the opposite, especially sell side. It seems to be an inverse indicator. So let's get rid of all this. So look at this. We just got the penetration through the, you can see the ppm here where my cursor is. We're just penetrated through the second derivative. That tells us we're going to challenge the 10-period moving average. Right now that number is 60.26. If you recall a few minutes ago, it was 60.29, so it's coming down. So we're looking like we're going to at least get up there and challenge that number. I've got the browser expanded just so the numbers are really big here so you can see them easier. But yeah, so we're coming up towards that 10-period moving average. We're minute 50 from the next close, and that'll put us 5 minutes out from the final ticks here. Yeah, I'm just looking at some comments here that you had. Let's go ahead and watch it close. Let's do this. I'll spend some time. I'll go through some of the questions on the chat and go through it. So here we are trading up, trading up towards this. We're seeing the PPMs. We got a minute to go. We're probably going to stall right at that 10-period moving average, a rejection point. I find it incredibly risky. Sometimes if you figure it out, there's a good trade here at the end of the day, but there's two, especially after a Friday on the week, all that stuff, on a week like this, you want to, who knows what kind of squaring of books we're going to get, but we're still trying to move up towards that 26 level. The last trade right now at 23.75, 24 offered right now. So yeah, we'll go through once we get through. Let's look at the Russell. We'll do some Tesla. We'll look at NVIDIA. There's some questions out there on the timeline here. Yeah. This has been an amazing week, folks. I have to tell you. I saw somebody on TikTok going, things feel kind of weird. Everybody's kind of, okay, Trump won, everything's okay. We're going to concede. There's a lot of mistrust in this country, unfortunately, no matter what side of the table you hang out. So we got to RTX, we got the update, PPM1 turned down. We did not get any upward acceleration. So what this means, let me bring up the drawing tool again so you can see this. But all this means when you see this, so we got a flat down here on, you can see the downtrend, the downward pressure is still growing a bit. We did get a couple little stair steps here. We got a little down, up, and we got another down. And we're about to come back through this. So we got a little bit of sign. We were able to get up to the RTX, which is extreme level here. And then, you know, like I said, it's starting to get some sort of downward move that's starting to adjust a little bit. So chances of getting any moonshots, not real big. We're probably looking at really just staying within a range. We might see some recovery as we get out here in a few minutes. So once we get the close under us, we'll go back and take a look at some of this other stuff. I'm just looking here. We've got about 3 minutes to go here. Yes, I'll go through the Russell here in a minute, but I think, man, some of the things that I talked about in my previous video I did an hour ago or so, talking about this big rotation, productivity, all that. The Russell, the Russell's still got issues, no matter how you try to stack it. The mid caps definitely have some issues here, and one of the things that I've talked about a fair amount is this portfolio I built while we're waiting for the close here. I'll bring that back up in a minute. We'll watch it close. So here we are. We got a little print. We're trying to come back up here, testing that 10. 20, let's see here, 25.40 now. Last trade is 20, right there. So we did manage to get to the 10. So everything was pointing, when I was talking about how the PPMs were setting up, everything was pointing to a little mini bottom, test of the 10. We got another update here coming in a minute 20, which will be right at the close. But it does look like we get some recovery. And it was a pretty decent sell-off with basically 20 handles. The high was 40 even, 60, 40 even, and we printed down to 20, looks like 20 even. So exactly 20 handles. So that was a really nice short off of these inverted V's, to say the least. Dean X, what are you talking about ceiling? And I don't know if you had a previous comment. But yeah, so we are able to trade just above here. Look at the red dot forecast is starting to forecast us into this range. Like I said, we could get some recovery. I'm just looking at, yeah, so the algos are improving as we got some trades here. All of a sudden, we're back at 25.50. We're back. We're up 20 handles. Look at this. Here it comes. Here comes the closing bids coming in here. Yeah, we're getting that volatility. Wish I could get the order book up there for you folks so you could see what's going on. But yeah, so there's a close. We got just above the 10. We got RTX on a 5-minute chart. Let's see if we can pull that up here. So the RTX was 27.50, the high 27, hang on, 27.50 on that bar. The high was 27.25. Like I said, typically that market grid is so good at identifying prices. So if you have like an uptrend, you have an upward channel like is formed on a market grid. I also use that, especially intraday. It could be daily even, but I use that channel to be able to trade off of. So if we're looking at, we've got a nice uptrend and projections on the algos, or the auto regression is telling us that we're likely to see the PPM values still increasing, all that, then you can trade off of those lower values. If we look at this last bar, that range was, let me just get the range here. That range was 21 to 27, so there's 6 handles. That's pretty good. Yeah, it's 24 ticks. So there's a good scalp, but there's even a good trade here. Now it looks like we should normalize as we go through. So let's do some other analysis. Let's get over here and let's do Tesla. Been a fair amount of chatter on that. I thought it was sort of funny that I saw, I think, Elon with Tucker Carlson or something, and he was talking about, well, if Trump loses, I could be in trouble. It was kind of funny. So, but looking at this Let's get Tesla up. I want to go back to a replay. I just want to see what Tesla was looking like. This is daily Tesla. I'm going to see what the algos were. We're fairly flat. We're looking at this jump move here that came up, and we traded in sideways. A lot of times we get into an individual stock. You'll get, we've got some Fibonacci targets that came in here, but we get this little, I always call these dragon heads. So it looks like from here, this is back a few days. This is what? This is October 31st. So let's just see if we can run this script and see if we, like I said, these replays, I hate that. Okay. The replays look a little different, but what we're looking at here is we did get, we had a forecast up, and right here where this is going, everything was being forecasted higher, and we got this move up. Let's go to a weekly, see if we can find anything here that makes some sense. So this is something, last time I covered Tesla, we had 3 Fibonacci targets in play going back. Those targets came out on September 16th. They were 285, 325, 349. We come over to this week. We got up to, sorry, I'm going to have to downsize this so I can get everything on one screen. So we look at this fib target here, and we're looking at what, 328 high. So we traded just above that 325 range. And this was, like I said, this projection came out on September 24th. So we've got an extreme value here. I'm just going to go out and just take a look at this thing at a little more in depth here. This is actually more interesting. So here is the monthly. We have 3 fib targets on a monthly basis. So this is the big swing target, and we've got 336, 411, and 556. So we're definitely looking at 336. We're almost to fib target 1 monthly. And then we've got some big targets, which actually would suggest that we're going to get challenged a 414 high at some stage. This is monthly, so we're looking at multiple months to get to that level. I'm just reading some comments here, so bear with me. Yeah, we'll let Trump be president, Snook, and that's cool. Let's see here. Yeah, so longer term, I'll not sound like Kathy would, but there's some really, what we've seen here, let me bring up the algos, what we've been seeing going all the way back to July, we've been seeing the PPMs cross over their first, second derivatives, everything's starting to point to increased volatility, even though we went sideways in this range. If you go back to the earnings jump, let's put that up there so you can see that. This was, let me expand it. This was the earnings pop way back here. We retraced back down. A lot of folks, I have to tell you, probably one of the worst things that's perpetuated out on the internet is this so-called fill the gap. I'm doing air quotes. Well, we got a gap to fill. There are thousands of gaps that have never been filled. That's just like not a great trade. I know when it happens, everybody goes, see, I told you you're going to fill the gap. You know, not a great trade. In fact, gaps are good because you have 2 gaps here, and there's a couple of things that happen when you get, typically you can get basically the breakaway gap, Okay, that's bullish. Doesn't need to be filled. We retrace. Now we got a second gap that broke it. Looks like maybe, let's see here, is 62. The low of the gap bar is 75. So we gapped again on this. And typically you can get three gaps, and then you get so-called, and Edwards and McGee stuff isn't very good, but you get the exhaustion gap. But if we start to look at just trending cash flow into markets and things of that sort, it kind of removes a lot of that noise that's in the market, and so that's definitely that's it. Yeah, WaveTech Weekly did have a buy back in December of 23, I hope, right? We're not December 24 yet, but yeah. Yeah, so let's go to daily. Let's see, I think this is daily. Yeah, we're at daily. So, yeah, there's an overlap here. I don't worry about those gaps. They don't mean anything to me, I guess, is what I'm trying to say. I just think too many folks out there trying to promote these things like they work, and they do work sometimes. The gaps do get filled, but if that's what your trades are based off of, you're probably not missing things a lot. So let's go ahead. Bear with me 1 second. Yeah, so on 24 on June 77, the last buy on WaveTech here is 77.92. So we're already up 66%, not counting today, this end of day. So that's pretty good. It's been pretty choppy, as everybody knows. It was a nice entry off of this decline here. We made a little profit here, and then got that up there. So yeah, so it's interesting because the note from the models is that we're in phase 1P, which is a position phase 1. So it's still seeing this in the beginning phases of the markets from that standpoint. Let me see if I can blow this up and. Yeah, so we can get a little bit of an idea, and I think I can draw on this chart. It's kind of a wonky chart, but we'll just go with it for the moment. But yeah, we got a buy right here. Let's change the color. So we got a buy in here. You can't see it, especially if you're color buying. So we made a little profit here. We stayed out during this period, and then right here was the last buy. And you could almost argue here, folks, that what we're seeing here is exactly what the monthly charts are picking up on that Fibonacci, that there's a swing trade coming. This is the all-time high up here. So we're seeing a possibility of a swing trade to test those highs and 22 highs. That's what if we go back out of here, go back to trading view, you'll see what I'm talking about here. That's these Fibonacci targets. That's where they're coming from. This is a daily. So if we go back to, let's go back to monthly. This is what's being detected here. This is interesting. I pull this down. There were targets here for crazy numbers. Now I can talk like I'm Kathy Woods. There was a target out there, 505, 550, 657, and then all the way up at 750, which would be a double from here, right? So, but these are the most valid numbers right here, which are the numbers I just put out there, 336, 714. So let's go ahead and take a look at RTY. Let's kind of move on. So looks like RTY 2480 was the all-time high, and we managed to get 2426. That was a spike high. So this is monthly graph again. Let's take a look at this. I need to go to RUT, need the cache to get more data. So bear with me a sec. Hang on. I see a couple things I did not know was going on here. This is the settings inside of the ppms. This was set on 50. So I've just got to get yeah, I don't know why some symbols the algos won't calculate on. Need to figure out. I've seen this before. Yeah, I just can't get it to go monthly. Let's go to weekly. Now this will be helpful. So somebody was saying that the Russell looks overbought. We had some Fibonacci targets. The last time I covered Russell, I was talking about these targets. This goes back to also September 16th. And then we had 3 Fib targets out there, which were 2300, 2417, and 2489. So we're basically satisfying the high here has been 2417, high 2402. So we're hitting Fib target 2. And let's look at the PPMs. PPMs are actually, we've got a bunch of potential inverted V's coming up here on a weekly basis. But this is also the case. I'm going to spin back over to ES. ES is also showing that we're going to get a loss of momentum here. We're still looking at some upward targets here. And I have to tell you, I know that when I had that crash earlier, I think I loaded up a chart. Okay, no, this one's okay. I just want to make sure the settings were right. But you can see momentum, S&P, we'll go back to Russell. All of these are predicting somewhat of a climactic top of some sort. Let's do NASDAQ. RTXL. NASDAQ's got, looks like another potential week, but look at the Fib targets. This is weekly. This Fib targets came out on another September 16th, and we're looking at the 21,221, 22,700, and 23,613. So we're coming into some of these Fib targets. Everything's showing that we're going to flatten out here, which would make sense. I would say when I was on a podcast, this guy that I was on with yesterday, Dennis Neal, he used to be on Fox and I think CNBC. And what we were talking, he was going, well, haven't you been kind of negative? What I've been is talking about this sideways range that we've been in going from September, where we've been consolidating. This blast out this week obviously was a market event. Everybody's looking forward, maybe looking forward too fast. So there's a point to be argued that the markets have kind of overdone it this week. So, but all the algos on a weekly basis don't look like the daily. Let me put that daily up just to kind of contrast that. So I'll put a 10-minute up. Yeah, so this is interesting configuration. Daily still shows multiple days. I talked about this in Substack last night, looking like potential into Wednesday to Friday next week, maybe a peak then. Then we start to consolidate. And so don't get in the way of this thing. Don't go being a hero. Markets are closed, but I would not be looking to try to get short this thing just yet, but there may be an opportunity as we get toward the end of next week. So once again, just advertisement, get the Substack. It's $8 a month, month to month. You can get a full year for $80. I think it works out to $6.50 a month. And so get that, kendallreport.substack.com. That'll get you there. We'll put some stuff in the for the replay. We'll have some links down below. But the algos are suggesting that we're still working towards some of these upward Fibonacci targets and things that have been lying out there. I said this week we have to argue has been a pretty big big week as we expected would happen. But let's do one more thing. Let's take a look at the ruler. Okay, so this is daily. Check this out. Let's go through this analysis. This is NVIDIA. So NVIDIA has some new, as of today, some new fib targets, 161, 172, 179. Algos are suggesting consolidation, then a decline. Let's take a look at the PPMs. Everything seems to be getting somewhat at a peak here. And think about where we are right now. It is November 8th, and we're going to come into year-end forces, rebalancing all types of portfolios. We come into December. We got holidays coming up on us pretty quick here. So just a lot going on, and it looks like everything is starting to forecast some of these lower prices. We certainly would have to say there was a bit of a spike this week and see how it plays out. My more important things, which in a few hours here will run the database and expect to see, see what comes out of that on the intermediate database, is going to give me a bit of a feel whether we're getting another recycle here. It's just it's been a story of the year, as I said earlier on the previous video, that this has been the case. But yeah, so let's. I'm getting at the end of my getting a little tired here, ready to call it a week. It's been quite the week. It's been fairly exhausting, to say the least. Gilly, I haven't looked at the Dow Jones in decades. I don't really. I know a lot of folks are starting to trade it again. And I'm just going back looking at some comments here. Zoltan was saying, how high can it go? This is getting ridiculous. And that's what the algos are saying as well, is that we're getting a little frothy up here. There's not a lot of oxygen up this high, but it will be more likely a consolidation. We could see, this is what we don't know, folks. We can do all this work all day long, and what we don't know is how this party ends. Does it end in a big reversal and everything collapses? I don't know that's the case. There's going to be a lot of dialogue around the markets from the standpoint, is Trump going to do all the tariffs? One of the things I'm hoping to get to this weekend is actually, I'm going to go back through McKinley, President McKinley. late 1800s. That's an era that I've studied quite a bit. A lot of people spend time studying 1929, and I find the railroad bust 1877 and actually right into the turn of the century, a very, very intriguing time in economy and what was going on from the standpoint of a lot of these, not, there was no central bank then, right? Just a banking system and all the things that happened during that time. It was actually the longest depression there's ever been in history. And those of you that are in the UK, even a longer history. I think it was close to 30 years in the UK that there was depression-like theories. We sold you Brits a whole lot of railroad bonds. So there was a big collapse going on. But I find that period very interesting to study. Back when the 2008 issue was happening, one of the things I was talking about then, I was on what was big at the time. I was on a conference call. There was about 400 investment managers there. And there was a guy from Federated Mutual Funds and myself, and he just left the Federal Reserve meeting in New York, and he was talking about how Ben Bernanke was an expert in 1929 in the crash, and the problem was everything that they did in 2008 was the wrong thing to do. They did the same thing that they were doing in 1877. I said, well, he should have been an expert in 1877 because he would understand what was done and how they tried to finance their way out of it. And they did the same mistake. I won't go into the details of that at the moment. But the similar mistakes were made, and what they were doing was sucking the liquidity right out of the banking system until it was about to collapse. And of course, we know all the TARP and, Paulson, and that was another interesting point and data point and timeline. But so where we are right now, I'm still going with, I was bringing up this earlier. Let's see here, some of my documentation project I've been working on and research, and really just looking at this super cycle event that I think is happening. So there's a lot more to this. I get, we're in nosebleed area. I mean, we closed trading at 60.28 on the S&P. And I still have targets at 61.20, 61.50 range, and even beyond that. We get into longer term, I'm looking at 7,600 on, if we go out to 27, 28. And I remember back in the pandemic, some of you have been around, I was screaming, and when this thing turned around pandemic, I said, we could see 5,000, 5,400 on the S&P. It seemed absolutely stupid to put those words out there, but now we're at 6,000. So there's a lot going on here, and the other phenomena that I always talk about is there's a lot of folks that are trading the markets now that weren't trading the markets 10, 15 years ago. So you've got massive liquidity, a lot of stampede trading, and we certainly saw the stampede this week. If you got in the way of this rally, you paid dearly for getting in the way. So just to kind of summarize here, folks, thanks for hanging out. Just to, at the end of this thing, if you're interested, you're new around here and following me, I have a Substack newsletter, and you can go to kendallreport.substack if you want to find out more about our indicators, our product. You can actually, we'll put some links in these videos below, but you can go through, and we've got portfolio management tools for both pros and for retail. And then we also have all the indicator suite, which is everything that I've been going through today. So appreciate the thing. Yeah, Final, that's great. The Man Who Built America. It's a fantastic historical series. Yeah, I'm gonna make a note of that. Hey, listen, I just need to tell you guys, you know, I hate that I'm not able to get on the internet as much as I used to, but there's a lot of personal things going on in my life, but I'll try to be here the best I can. But the Substack, I'm up to a lot of days. I'm up to 5 a.m. Eastern time when I finish the Substack, so it's always out before the next open. Sometimes earlier. Um, who's the author on that book? Do you know? I guess it'd be easy to find. Oh, it's on YouTube. Okay. All right. Good. Yeah. It's interesting. I've got a good friend that's a documentary guy, very good editor. We keep coming up with projects, and I think it's going to be interesting being in America. Um, if we're truly going to rebuild manufacturing and other things here in this country, there are some. I've been having this. Yeah, History Channel. Okay. Yeah. Got it. Okay. Um, yeah. Someday maybe I'll do a live stream about it. But I've been talking with this guy for probably a couple of years. When we've seen a lot of BS come out of government, such as the infrastructure bill, all of these things that have been thrown out there, bringing back manufacturing to the United States. All of these things have been promoted through different political parties and people, and none of it ever really happens, right? All they look at is if the metrics on manufacturing uptick, see, we brought back building. No, we have not. Okay, I grew up in a northern Indiana, just outside of Gary, Indiana, and in the what we used to call it the region, okay, and then just outside of Chicago, and the Great Lakes and all that. And if you go and Google, matter of fact, we can do this. I want to show you this. I'm just going to go on a little rant. I'm going to put this out here so maybe you folks will keep me honest. All right, I'm going to go back and share the screen. Excuse the dog bark. Okay, this is the region. So this is what we're looking at here. This red line is Gary, Indiana. Okay, when I was going through college, I grew up in a little town over here, Portage, just right over here. And if you look here, this is the old Gary Works that I'm blowing up here. And this is the plate mill still there. There used to be, I think, close to 80,000 people worked in this area. There's, I forget how many, 8 to 12 miles of lakeshore. There's also a big port, everything here. And right here are railroad tracks. So the infrastructure to start to rebuild, this also goes into Ohio. If I were to just go along some of the Great Lakes, there is a path. I'm just going to throw this out there at you. There is a way to go through Lake Michigan and actually go through, I believe, the St. Lawrence, but you can get all the way out to this big pond out here to the Atlantic. There is a way to get out there. And so there's a big shipping channels. There's all kinds of stuff. I grew up, I'm lucky to be here to even talk to you folks, because I should have been killed on this lake about 20 times. We used to take a small ski boat out in this lake, and easily, if a storm would have come, no one would have ever seen us. We would have been at the bottom of Lake Michigan. It's 175 miles wide by 300 miles deep. But here's my point, is there are areas in the Rust Belt that could easily be rebuilt. And if they really want to bring this back, I hope somebody, these are, I forget what they call this, these are zones that there was so much crap in the ground here that you can't do anything but industrial. You're never going to have any retail. Meanwhile, you got miles and miles of lakefront here. And so my concept is, if you look at, I'm going to try to just let me go off screen for just a second. I'm going to try to bring up something here. Bear with me. I'm just, hopefully I'm going to show you something. Yeah, I'm going to be able to show you this. Awesome. So back to the screen here. So this is the reason why, I think America has a lot of upside. This is all of the railroad tracks, and you have all of the rail systems go through Chicago. Anybody been to Chicago and seen some of the big switching yards in Chicago? I used to ride a train into the Chicago Board of Trade when I first started trading, coming out of Indiana into this. But every railroad track, you can literally, all these West Coast arteries, this is basically I-10 corridor down here where my cursor is. If you're going to rebuild America's industrial, then you do it exactly where the lands are already appropriated. It goes through Lake Erie. We can go through areas here in, Ohio. All of this stuff, if you're going to make a comeback, but I want you to think about something on this, is that as we look at this, I went on Zillow, and I can buy an entire street in Gary, Indiana, for like $100,000. I mean, these houses are all gutted. There's the real estate. There are no real estate values, so you could go and actually build corporate housing. You could do everything here. There's even, you can see here, the Gary Airport is actually a decent airport. There's all the necessary infrastructure is sitting there waiting to be done. So I keep waiting. I was talking to some of my old classmates. I still have classmates and friends that still live back in the Portage area, and they just think I'm full of shit on talking about this. But if you're going to do it, why wouldn't you do it where the infrastructure is? Why wouldn't you rebuild America starting where it was tore down? This is all the crap they sent to to China. So why wouldn't you do that? And you got every railroad track, every shipping channel goes through. Everything is right there on the Great Lakes, and it's absolutely phenomenal. There is, if you look at some of the mining companies, there's all kinds of stuff. Even up here, we come up here to Wisconsin and Green Bay. There's ways to get stuff. There's Minnesota mines. There's all kinds of stuff that's here. All the ores, everything's right there. Todd's saying it. Rail, water, highways. And one of the things that, one of my big hypotheses is that the easiest thing, and I had a guy, I've lost contact with him, that was in my old trading room, and it might be Steve that's hanging around, but was a railroad engineer, worked for many years, and one of the most likely autonomous movements there's going to be will be the rail system. It's the easiest thing. There's a few things that need to be taken care of, but for the most part, I believe a lot of the rail system, there's already, computer systems that are running the switches and all kinds of stuff. So it's, we need more Elons, but, more importantly, if I know the history of U.S. Steel and the steel industry because I grew up around that. My dad was a blue-collar worker, carpenter. He helped build a lot of the industrial infrastructure that was around that area. So I grew up. I was born in 1952, so I watched. This goes back to my fascination with William Chesney Martin, the Fed chair, because he was around from 1951 to 1970, which was the big industrial boom in the planet, but primarily in the U.S. And he oversaw that growth. So I think it's the reason why I'm fascinated with that is because of the hypothesis that I'm playing out is what is it going to be like to build out this next network. It's all there. There is a big power plant as well. Let's see if I can find my cursor. I can't find it. There we go. There's a big power plant that is right here, just up the shoreline. Probably be able to find it. There's probably the cooling tanks right here. Yeah, this is right here. There's a big, you can see, you can do another 3 Mile Island. You could rebuild all the nuclear right here. I'm telling you, this area it's a classic Rust Belt area. It's been gutted. I mean, I've got, like I said, I've got classmates and friends that still live back there. I don't go back very often, but it's fascinating when, from my viewpoint, if you're looking at how do you rebuild the industrial, it's you want to go where the infrastructure is there, water, rails, you've got everything right there, and and you can build. I almost see going back to the old world of corporate housing. There's a place in Arizona where there's a giant mine out in Baghdad, Arizona. And if anybody of you ever looked at that, it's got a giant solar plant. I think it's got I forget the number. It's a monster gigawatt plant that's run. It's like 150 degrees out there. It's really out in the desert from that standpoint. So anyway, I'm sorry, I'm just kind of chatting about this, but it just kind of come up when we're starting to look at all of this stuff. Bullet trains in China with 200 mile speed. Anybody, those of you that are in Europe, I was just talking about this. Why don't we have a good rail system? I mean, everything is cars and planes. We don't have a good rail system here in the U.S. All of this stuff needs to be redone. I mean, you go to Europe, you can go. You don't have to have a reservation. You walk up to the train station, jump out. Go to a kiosk, buy a ticket. I did it when I was in Europe. I went from Zurich up to a buddy of mine's in Lugano. I went up there, and it's like hour and 20-minute train ride. It was like super clean, very comfortable. No weird stuff going on. So you just need law, order, infrastructure, and really restructure everything. When I look at America, and especially traveling around the world as I get an opportunity to do, you go to Singapore, you're like, what? You go to some of the Asian places. It's amazing what we see out there. So I'm trying to find something here real quick. I'm just trying to get. Trying to get something come up. Bear with me. We'll hang out for a few more minutes talking about this. I think it's interesting. Please put some, if you're listening to this on a replay, please comment on this, because I think there's something pretty amazing. I think the opportunity in America is absolutely crazy. Let me just. All right. I've just about got it. Bear with me. Almost there. I don't know why I'm having trouble finding this thing. Okay. Anyway, I'm just going to kill that. That was a bad idea to go down that road. But yeah, I'll come put this back up. But anyway, we have everything that we need, to really do something pretty amazing. And I suspect I live in Arizona, so we've been invaded on the illegal aliens, deportation. There are some bad people that came in the country, but there's a lot of folks that are actually willing to work and do things. I hope we figure out something to make things work. But I'm telling you, rebuild Gary, Indiana, the Rust Belt. There's so much opportunity there. It's crazy. Anyway. Yeah, I'm hoping that Elon hanging around, that we really do get some of this stuff I'm talking about, because I see like an incredible opportunity which to rebuild the industrial base in this country. Listen, I'm an older guy, right? I'm 72, so I saw, and my dad was involved in around this Gary, Indiana area. I watched them build this, and then I was gone, but they tore it down. They ripped it down. I mean, all of this is like skeletons of buildings that used to be there. Okay, and you can see they're just all of this stuff right here in this middle used to be unbelievable buildings and stuff that went out. In fact, let me just see here. Yeah, I think where this building right here, I worked there when I was in college. I'm sure this is it. Yeah, because this is soaking pits. Yeah, that's the old 46-inch slab mill. And it's interesting that they left the infrastructure there. But I don't know who, I guess U.S. Steel still owns this land. I'm not sure. But the point is that I really think that this is where it happens. And it's really going to be cheap, because you can buy Gary, Indiana for about $10 right now on a relative basis. There's no value of any of the property there, so it's one of the easiest rebuilds, and it's like that through a number of other areas in the Rust Belt. The only reason why I know so much about this is I grew up here, and it's kind of interesting. Man, I'll tell you, I feel really good today. I know a lot of folks are maybe of other persuasions of political, but I feel like if we can do the right things, it's not about Trump, it's about getting this country back into thinking about how do we do these things that are necessary to actually be self-supporting. We've shipped all of our we all know this. We shipped all the manufacturing now. There was nobody who wanted to do it. So maybe we have people that will want to do those things, and they can be viable folks to work. And I'm not talking about sweat rooms and slave camps. I'm talking about legitimate society rebuilding, manufacturing rebuilding, and somebody has to do this stuff. Yeah, seriously, Pamela, I think this is like I mean, I literally was looking at if I thought this was going to happen, this would be the place to buy real estate. I'm serious. I could go on Zillow and go to Gary, Indiana. You wouldn't believe what you can buy for like $8,000. These are, just a vacant lot. They're just free. There's like nobody wants them, and somebody's going, just put it on the market. Hope I can get some money out of it. But this is, I think you could, like I said, there could be. I've been threatening for years to try to put some kind of documentary together or find some people. If anyone's out there listening knows folks that can put a good documentary together, I think there's an amazing story waiting to be told here, and I think it could be inspirational maybe to the people that are out there to do these things, whether it's Japanese steel companies, whoever it might be really good. Yeah, that was very brave. City of Los Angeles took the Greyhound from Coachella to El Paso. Yeah, yeah, that's very interesting. Yeah, so one of the things that I think it's going to be interesting for folks to take a look at some of this stuff. I think America is, and the reason why I think what I've been talking about, this super cycle, it's not just about AI. We need efficiencies across the board. I'm a big nuclear. I think these many little nuclear cells that they can build right now, you could couple those, maybe one, you could supply all the energy for this. I live in an area, there's about 120,000 population here. And the good thing about Arizona, like I said, we have Lake Powell, we have the Hoover Dam, we have the saltwater project, which is more hydro, and we have a nuclear plant down in the outside of Phoenix, about 50, 60 miles. So we're a very green environment, but all of this could be built out very simply, and the infrastructure is mostly there. At least the transportation part, all that is there. Just looking. Yeah, that's interesting too, Pamela. Yeah. So we've got to put this country back together. I'm hoping that we see politicians. One of the things I'm really excited about that Trump's talking about is getting term limits on all these senators. We got to clean this place out. The only way you can clean the swamp is to not give them an opportunity to be there anymore. So we've got a big task on our hands, but we have the land, we have the right attitude. We have the potential to do this. And, there's vast land. As somebody was just talking about driving across this country, most of the time you're driving, there is nothing, nowhere. Musk has talked about how open this country is and how few people are here. And so I always flash to Star Wars in the city of Coruscant, right? It was like all buildings. No one needs that kind of density, but the but there is so much opportunity here, and so much opportunity for, the Bill Gateses of the world telling us that we're overpopulated. We're not. We have the growth, the technology, we have the foresight to really do some amazing things. Yeah, and we're going to have the pipeline too. You watch how fast these things come together. So, anyway, folks, just thought this has been on my mind for years. I've talked to friends about it, so I've never put it on a video. We'll see if anybody lasts this long, the hour and 40 minutes into this video, and figures out that I said anything like this. Yeah, you're not wrong, and that's kind of what I'm saying. We got the people now. If you get rid of the bad stuff, we do have the labor force. So there was a better way to probably come about this than we did. It's going to be interesting to see how this all plays out. And, it's like anything in life. It's hard. Once you do certain things, it's hard to reverse those elements. So anyway, but I love the Gary, Indiana story. I love the Rust Belt story, just because most of these places are like this. And it's kind of interesting. I'm going to zoom in on this. This is a community. Used to be when I was growing up as a kid. Let me see here. It's going to be. Just got to see where we are. Okay. Here we go. This area right here. This beach still looks fairly big, but they had to build a wall to keep it like it is. But I grew up in around this area. We lived on this beach, and it used to be like a football field long. I mean, and then they built just over here. They built the port. You'll see it. Here we go. See how much over here. They put a big water break that goes way out into. You can't see it. There's like a shadow on this thing. You really can't see it, but there's a water break, and it forced all the water flow to literally wash out all the beaches. And it was like people had beachfront property all of a sudden were building walls to protect their property. I think if I zoom way in here, yeah, you'll see here what they had to do. This is a rock. This is all rock. They had to do that, or otherwise these houses would have got just dredged out. So right about, probably right about, okay, right in this area right here. This is really interesting. Actually, I haven't really looked at this. I had a friend that lived at this place here. We used to park our ski boat out there, and there was like, a Florida-style beach right there. Look at it now; it's gone. They had to put rocks there, so that's kind of sad to see. But that was they promoted that as this big project that was going to get the area to turn around, and there was going to be all kinds of commerce and jobs and all that. Steel industry, like a lot of industries, the steel industry changed a lot. It used to be now you have continuing casting, and you pretty much can take the molten steel, pour it into a continuous caster, take it right from there to the plate mill, and you got all the sheet 10 that you need in the plate mill. That's pretty much all Gary Works does now. They still have that piece there, but I'm just telling you, this is like, I think an epic story. I hope somebody figures it out other than me. Let's put it that way. But I think like I said, I'm kind of stuck in a loop here, but I think there's a great opportunity here. Yeah, I'm just looking here. Did you see the hydroplanes? What are you talking about, Floyd? You guys are chatting amongst yourself, I guess. not to me. But yeah, anyway, I think America is going to be a land of opportunity again. We've been stuck in this quagmire for way too many years, decades. We've seen all this stuff start to deteriorate. So I think it's time that we see things go a different way. Yeah, that's interesting. Yeah, like I said, we'll do full circle. Going back to Tesla, I believe Tesla's biggest advances they'll make would be robotics, robots, and AI. Cars are bad business, and I know the whole autonomous thing, robo-taxi. I doubt that people are going to be sleeping in their cars or be making money. Maybe it's possible. I don't see that as being a thing, but we'll see. And we all have our visions. Yeah, it was about Elon shaking down the government for R&D. Yeah, good call on that. Yeah, just in closing here, folks, like I said, I think there's a great opportunity. I feel fairly optimistic at the moment. This has been a historic week, I believe, for the planet. And, I did a survey. I'll talk about this a little bit. I kind of did a survey. I've got friends all over the planet. I've been making phone calls, just talking to different people, just seeing what their view is on a lot of stuff. And, the election was important to the planet because I think everybody wanted to see if America still had integrity. And at the moment, it feels like we did after the cluster that occurred in 2020 when things were upside down, compared to the election we had Tuesday and calling it on the same night. There's still some states, I have no idea what's going on here in Arizona. They can't count ballots. We have paper ballots and machines. It shouldn't take this long to put this together. Um, um, yeah, that's interesting. That's interesting about Palantir as well. That's been a moonshot, and yeah, that's interesting to put that. If we put that over here into wave tech, I know these numbers are fairly, but we bought Palantir on February 6th of 23. So a year and a half plus ago at $8.31, still own it, 572% gain. It bought right in this base. If you can see my cursor right above me. Yeah, this has been a complete moonshot. We sold out of it. I remember talking about how I thought it was the most dangerous stock back in 22, right when the meme stocks were breaking, and then once it got done, I think that's probably right. I agree, Zoltan, about what you say. Like I said, I just feel pretty optimistic, and this whole scenario I'm talking about with the potential for the market to do wonderful things here. I'm still trying to find. Okay, I'm still trying to find this big mine. This might be. Yeah. Anyway, there's a huge mine out here in the middle of nowhere in Arizona. Maybe this is it. Yeah, my point of bringing this up, here we go, this is part of it right here. but the reason for bringing this up is that there is they have corporate housing. They own all the houses out there. So when you work there, you get this super discounted place to live because they've got their own store. It's like the old, if you go back into the 20s, maybe the turn of the century when a lot of industrial, there were all these little corporate towns that emerged, and people lived in a town. They had their own stores. They were like almost like a big co-op. I actually think this. I'll close here, folks. We're just hanging out talking, but I actually think that a lot of things need to go back and how they used to be structured than trying to come up with a new structure. There were a lot of things that worked really well that got torn down. And I'm trying to come up with a quick example of that. But you're just trying to, these corporate cities, maybe it sounds, I don't know, if you're going to build like this mining district here, I'm trying to find, this one particular mine. This is one of them out there. But I always tell folks that Arizona is a giant rock. There's so much, we're the center of the world for copper. There's so much here and that can be done as well. And like what I'm trying to tell you is that we have probably being an older guy, I don't know how much I'll get to see, but I think the next 50, 100 years of the planet and of America in general is going to be a huge renaissance. That's how optimistic I am, not because Trump got elected. It's just looking at if we're going to do these things, then we'll do it. I was talking to somebody, I think maybe on the podcast I was on yesterday, talking about the $35 trillion in debt that's been focused on as this disastrous scenario. And there's been a lot of waste in that debt, but there's something else that may have been, in hindsight, we may look back at that money that was spent as the baseline of financing for what I'm talking about. And there's going to be a lot more money raised, but if the money's raised and there's infrastructure and commerce around it, it's much different than just kind of, not the best way to put it. I'm going to use a term. I try not to cuss on this channel, but there's not a if you have the cash flow, you can do some wonderful things, and you're not just running up debt, and that's the bulk of everything I'm talking about here. It's interesting because I am a boomer, and you have to realize my father was a military guy, World War II vet, and I always say we went from the greatest generation to the worst, which is the boomers. We've screwed up. We've done some good, but we've screwed up more stuff. And the millennials, I'm starting to see some really interesting talent start to come out of millennials, business-wise, political. A lot of people that are out there. The Gen X's are my children for the most part, and the Zoomers feel like they got a bit of a short stick right now. But the millennials are going to have to step up. You guys are the biggest demographic group out there, so you're going to have to do a lot of work, and there's going to be a lot of opportunity. I think the biggest opportunity ever from that standpoint. I think the markets are going to do quite well. Not that they won't have a correction. Let me put a chart up here, folks. I had it up here earlier. Let me see if I can bring this back up here. It's this chart right here. And somebody was talking about this. At the very beginning, if you watched the previous video, if you just joined, the longest bull markets in history, 1987 to 2000. And then, you can see all the numbers here, 582% gain. I think we see a multi-year advance coming at us. We could see 5+ years, and all of this GDP, efficiency, productivity, everything that I talked about in the beginning is really where we're probably going to end up. So anyway, I spent about 3 hours hanging out with you folks, which one of the nice things about being on the Discord, I get to hear your voices. I've been thinking about doing like a Twitter space where you folks could ask questions other than just typing in on the timeline. It's very intriguing to me because we have a lot of good meetings on Discord. So we'll probably go back to Discord next Friday. I'll let everybody know what's going on. But these big bull markets, they can last a long time. I mean, and this is without a 20% correction is how it's being defined. You can see here, 5 longest bull markets in history without a 20% correction. And these were the returns for those particular years. I mean, 87 to 2000 was huge. That was like some of the best things I did. Yeah, Floyd, I can see that. Like I said, if you follow Prechter at all, and this is about the 3rd grand super cycle high that he's predicted. Like I said, I have respect for Bob. He's probably one of the, I'm going to say the only market book I ever read, and that was in 1981 or so when I read the first Elliott Wave book. Okay, that's cool, Floyd. Appreciate that. How do utilities, listen, utilities are going to be a big play, I think, because you've got the energy. This is what we're talking about. So let's say we get all the houses, we get the energy to be smarter, and you're going to need a lot of energy. Whether or not utilities are players, but if I were in utilities, I would be looking to get involved in these micro units from that standpoint. So anyway, these bull markets can go for a while. I got to live through a couple of these on the screen, 82 to 87. I started markets in 79. Ronald Reagan came in 81. That was pretty impressive, that 82 to 87. And not to mention the 87 crash was one of my great moments of fame back in the day. So that was good. Then we got to live after 87 to 2000. And that was pretty amazing run as well. And like I said, we could go through and talk about each one of these periods, what was happening, evolution from a standpoint, 87, 2000, kind of the service economy emerging. And I think everything that we are looking at going forward is going to be bigger than all of these. And even though we're sitting here going, man, we're at 6,000, it's got to be a bubble somewhere around. I was talking late last night with a friend of mine in London, and we were having this conversation. And I know it seems like it's really high, and it is. And you look at the curve, and it's parabolic. Doesn't mean we consolidate and then refresh and go up higher. But if we just look at the pure fundamentals that are likely to come on, then we're going to see a lot of growth going forward. I'm not, what is it, the burner cycle? Not real familiar with that. Maybe I should be. I live in a fishbowl, so in case you didn't know. I will look that up. Pretty much everything you guys hear from me are things that I've learned from the markets, being around for 45 years. Most of the theories are of my own. Like I said, I live in a fishbowl. I try not to look outside of it too much. Yeah, I think any of these old, Floyd's talking about 7-year debt cycles, all this stuff is out the window. You know, I always talk about trying to trade, looking in a rearview mirror. Pretty much everything that existed once before is different today and will be even more different in the future. So we'll have different metrics to put up with. And this is why we've seen what in the last, let's say from 4,500, just a random number, 4,500 on the S&P on, there's been, I don't know, half or more of the internet just predicting the end of the world and a collapse, and it's a bubble, and it doesn't happen. As I said earlier, is if it's a big voice out in the markets, a lot of noise that people are talking about, that's probably wrong. You know, I'm typically a contrarian on that. So everybody's talking about this is a top of bubble, then there's a lot more to go. And, you know, it's not, what was that? I'm not sure the exact date. The tulip situation, 1600s or something like that. It's not 1600s. We've got digital, we have the ability which to move money in nanoseconds now. We've got Bitcoin. We got a lot of stuff that's ahead of us that is going to change society, how markets operate. Everything is going to be different. So will there be excesses? Absolutely. Will there be crashes and bubbles? Absolutely. Yeah, so yeah, and I mean, those are all hindsight numbers, Gary. I appreciate that, you know. The interesting about history, there's always a new event. And, you know, I don't get involved in trying to predict the tops. Well, what I do is I look at the metrics. I've told everybody from trading viewpoint is that trading is like driving on a dark country road with your bright lights on. You're just looking for the next corner. You don't want to go off the edge. If you try to look in the rear view mirror, it works really good as long as there's no corners. If there's a corner, you drive off the edge. So I don't see very much value in a lot of those cycles, and a lot of them are form fit and they look really good after the fact. But you know, maybe some people figured it out. You know, I don't know. Yeah. So. Yeah, all I can tell you is 2007 was one of my great predictions, and I didn't need a 17-year cycle to figure it out. All I had to do is look at the actual conditions at the time. My most famous moment was when Bear Stearns first reported the issue with the hedge funds. I started screaming, all the banks are going down. Our database went to heavy cash after the highs in November of 2007, as when we were selling everything in sight. When we came into 2008, we didn't own anything literally. And prior to the Lehman situation, our database was under, I believe it was under 12% long. We owned maybe 1 out of 10 stocks, and they weren't even working. So we were basically out of the markets. And then in March of 2009, we started buying everything in sight, and no one wanted to. Everybody was hesitant, and in July we had a second phase, '09, And it was interesting because our accounts that we were managing, we were making all-time new highs by literally by July of 2009. Our assets were at new highs. It took everyone else about between 10 and 13 years to get back even from that point. So a lot of folks were breaking even, way back, way down the trail from there. So anyway, appreciate everybody watching. Yeah. Good luck with those long-term cycles. Right on for you guys. Not interested. Like I said, those things will reveal themselves long before they happen. So I haven't seen a market event yet that's been a surprise, including the pandemic. Those of you have, I don't know if you can, unfortunately, we don't have where you can go back quite that far, but in the pandemic, in January of 2020, we were selling everything in sight. And we didn't know you retail folks at the moment. At that time, it was shortly after that we all met. But our institutional clients were calling, why are we getting all these sell signals? What's going on? And if you remember, we were at all-time new high. And what's interesting right now, and this is in contrast to that, is we did not have, we're not seeing those type of selling coming in. So anyway, have a great weekend. I'm going to call it quits. 3 hours. It was a long one. It was good kind of talking and getting a lot of stuff. We'll see what kind of traction we get on this. All right, folks. Have a good one. We'll talk to you soon.